we need to talk about the bloodbath that occurred in the stock market. Did we have a dead cat bounce? Is the Fed wrong again? Are we just going to have to get used to a new normal with interest rates? And of course, we will have an end of year wrap up. We're going to talk about this and more with the one and only Mr. Dan Bird. How you doing, buddy?
I'm doing great. Can you believe just a couple of days till Christmas?
No, I really, for me, it's the end of year. I just can't believe how fast the years are going as I
I
get
know.
older and older. It just seems like last year I was talking about running a marathon and I was looking at all these training schedules, and lo and behold, that's been behind me for 6 weeks. So it's
Yeah, it seems like
wild.
just a year ago you were planning for your event in Vegas.
Exactly. Now here it is again.
Here it
We've
is
got
again.
the second one coming. So let's talk about the bloodbath. There was a
Yeah,
1,000 point or 1,200 point down day in the market. Uh, Really, I think sparked because more and more people are starting to see the possibility that the Fed's going to be less accommodative. We had the dot plot, we had inflation staying above 2% till 2026. It was a lot of consternation. And I even think Jerome Powell said at the press conference, he really wishes they paused. But because he told the market a cut was coming, he had to deliver. I really think if you gave Jerome Powell true sir, he would have preferred to pause, but of course he couldn't. What do you think?
right. Yeah, no, I think that's probably true. I mean, he telegraphed it to the market, so he pretty much had to do it. And the market. The interesting thing is there was that bloodbath in the stock market when everyone expected the cut. So why did it really go down that much? Not only did everyone expect the cut, yes, the projection for next year is probably two instead of four right now officially,
Mm-hmm.
but that was kind of expected too. That shouldn't have been a big surprise. So why did the market go down that much?
Well, I certainly have my answers. Do you want to go first so I don't lead the witness? What
Well,
what are
that
you
I
thinking?
can tell you why I think,
Yeah.
and it goes back to the structure of the market, which is options expiration on Friday. I did a show on my YouTube channel on Monday about Max Payne
Right.
and what happens with Max Payne. As we go into options expiration week, and typically the market makers. So Max Payne basically means the equilibrium between calls and puts.
Right.
Okay, so if the market has been bullish, there's way more calls than there are puts, right? Which means market makers have to pay out that premium by options expiration. So what they would prefer is for that to come back into balance.
Sure.
In order for it to come back into balance, the market has to sell off if it's been bullish. Now, if
Sure.
it's been bearish, then the opposite occurs. But in this case, it's been bullish, right? Right. So the market has to sell off in order for the market makers to let those call options expire worthless
Right.
and not have to pay out all that premium. Okay. So that's what Max Payne is all about. It happens every month to different degrees every month. But what does that really mean? So market makers, their job is to make both sides of the market, right? So if you've got people buying, then they have to supply the seller. If there aren't enough sellers in the market, then the market makers have to be the seller.
Yep.
So they do the selling, right? And
Mm-hmm.
on the other side too, if you're selling, then they be the buyer. So they make a equilibrium market. That's what they are. They're market makers. So if they want that to get back to even by Friday, they are not. They don't have any incentive to take the other side anymore. If a little bit of selling starts, they don't have any incentive to step in and be a buyer. They're just going to let it sell off.
Hmm.
And that, other than some of the other things that really caused the beginning of that sell off, which is the Fed meeting and things that people heard and they think it's more hawkish than they expected and things like that. But I don't think any of that warranted the 1,000 point sell off that happened Wednesday, other than market makers stepping aside and not taking the other side of the trade.
So let me kind of repeat that. So basically, what I think you're saying is the Fed meeting and specifically the Q&A, right? Let's be very
Right.
specific. The market started to sell off during the Q&A, which was a half hour after the cut. So it wasn't the
Right.
cut, it
Yeah.
wasn't the press. it was Jerome Powell in front of a microphone
Hmm.
that caused that. And that, so what I hear you saying is that may have been the spark. I don't think
Yes.
there's any question it was the spark, but you're saying the inferno that enveloped into that 1,000 point loss was simply market makers removing themselves from the market, letting the selling come in so that they would pay out less premium on the. So it was just the structure of the setup for the last 2 or 3 days. Is that what you're
Right.
saying?
That's right.
Yeah. Again, this is your expertise. I'm going to lean on you for that. What I obviously saw was something completely different, and maybe what I saw was the spark. And
Hmm.
I really think the market, specifically the bond market, which moved violently for a couple of days, is now starting to come around to my call from 6 to 8 weeks ago. My call 6 or 8 weeks ago, which was roundly poo-pooed by a lot of folks, was the Fed's going to do a lot less cutting. I was calling for zero in 25, certainly zero in the first half.
Hmm.
Now, given the SOP, we have two instead of four. We actually have one of the 18 saying no cuts, and we
Yeah.
have two saying one cut in
Hmm.
2025. And again, I don't think we know anything except this SOP is going to be wrong because they change it every 90 days. So I think generally speaking, 2025 is going to be what I've been calling for 60 days, and that is mortgage rates above 7%. We're going to have small and medium sized business have higher cost of capital. We're going to have a really tough year in the real estate transaction industry. We're going to have a lot of pain in commercial real estate because cost of capital is higher. And I think the Fed's going to be nearly on pause the whole year. And I think that's what I mean. And the last thing I'll say before I give it back to you is on Thursday and Friday, I read multiple articles from folks talking about the 10-year note.
Hmm.
One was calling for the 10-year note being 5%. Today it's 4.6. Somebody else was projecting an outside chance at 6% 10-year notes. That will hurt the economy in lots of ways if we go anywhere between 5 and 6.
Yeah, no question. No question. And it'll hurt small caps in particular.
Well, it
Companies
hurts
that don't
smalls.
companies
Yeah,
that don't have a lot of cash to fall back on. So
could be a problem.
the big mega caps will be fine. But
Yeah, they're fine.
and interestingly, it's going into a time when small caps usually are strongest.
True.
Starting next
True.
week.
Yeah. So
Next
it'll
week
be
into April.
so let's talk about what you saw. So again, we saw 1,000 point drop on I think it was Wednesday, and then
Wednesday.
to your point, did we have a dead cat bounce because it didn't pop like 500 points on Friday or something?
Yes, that's right. It actually closed. It started up on Thursday a little bit, and then it closed lower Thursday than it did Wednesday.
Right, that's what I saw.
But then it had a big rally on Friday.
So what
Um,
was that?
let's look at it. Well, I think it was a dead cat bounce. We'll know more on Monday.
So
I
a dead
think
cat
the
bounce, just so I understand it, that means more selling on Monday.
probably more selling. Well, the selling dead cat bounce really means selling will continue. I actually don't think that it will continue. I think we actually still will get a rally at the end of the year.
Hmm.
But the Max Payne scenario, Max Payne concept, usually carries into the first couple of days of the next week.
Okay. All
And
right.
the reason for that is that market makers, you know, they'll save billions of dollars if the market went down. They don't have to
Right.
pay out that premium. But they did take the other side of the market on some of those deals. So that means if they are buyers when people are selling, then they will be sellers on Monday. They'll sell those stocks on Monday. So the market may go down Monday as a result.
Okay.
So um, let's take a look at this is my website, by the way, breakpointtrading.net. YouTube channel is right up here. I'm going to actually show you some of the splash screens that I
Hmm.
use on that. And then my newsletter is right here in this little box. I got a really nice comment from a subscriber who I didn't even know, but he said he's been reading it for years and
Mm.
it is excellent. And he thanked me for putting it together. And says just somebody in the background that's been reading it. I often don't get any feedback at all from people.
Mm.
So I send this out
Folks,
every weekend.
folks, yeah, folks, do me a favor. If you are reading it, send Dan some feedback. Hit reply and let him know if
You
you
don't
like it,
you
don't
don't
like
you
it.
don't need to. You don't need to. I started doing it for friends and family years ago, and I just continued. And it's actually a way for me to crystallize my thinking at the
Mhm.
end of the week by doing the research and looking at all these things, and then I just put it into a newsletter and send it out to everybody else. So
I
that's
like it.
really the reason I do it. Um, so let's look at this is my splash screen for my this is from Friday's YouTube video,
Nice. Perfect.
Dead Cat Bounce, and here's the one from Thursday,
Ah, yeah, I saw this one. Yeah, the Hindenburg. Yep.
Hindenburg Omen. We'll look at that actually. Another guy that I follow said the Hindenburg Omen triggered, but I don't think it completely triggered.
No, I don't think it did. Yeah.
Yeah, it's very close though. I mean, it could still trigger, but I don't think it actually did yet. So let's first um, look at the S&P on a short-term 10-minute chart. All right, there's 10 minutes. So here's Wednesday. Let me
Ooh,
turn this
that's
on.
ugly.
So here's Wednesday. So this is 2 o'clock, right when the rate cut was announced.
Yep.
So the Fed didn't start speaking until 2:30, just here.
Correct. Hmm.
So it was already halfway through its move lower after the cut. So you can see what happened. There's the bloodbath right there.
Hmm.
And then Thursday, it kind of went sideways and then continued down and closed lower than Wednesday. And then Friday, we had a big bounce right here, right up until about noon, 12:30, and then it started selling off again. So that's what I mean by dead cat bounce,
Yep. I see it.
right? It bounces right there and then starts back down again. So it doesn't sustain the uptrend, essentially. Now we don't know yet, and based on this and based on what I just said about Max Payne, I think Monday morning probably more selling will come in. And then we'll have to see how the market ends the day.
Now, the market next week, is it just closed Wednesday?
No, well, it's half a day Tuesday.
Half a day Tuesday, closed
So we
Wednesday.
have we have basically we have 5.5 trading days left
In the year.
in the year.
Okay.
So full day Monday, half a day Tuesday. One subscriber said, what do the big traders do when during Christmas week when there's very little volume? And I said they all go to the Hamptons.
Yeah,
That's what
they're not in front of their screens. Yeah.
that's what they do. That's why there's no volume because they're not there.
There you go. I like it.
So it'll be volatile. So it's kind of hard to tell what's going to happen. Usually, right after Christmas, the market starts to rally. The Santa Claus rally officially, according to Stock Traders Almanac, who is the company that actually invented the Santa rally back in 1972. The official start of it is December 24th.
Oh, I didn't
Now,
know that. Okay. The
now
24th.
December, it's actually the last five trading days of the year and the first 2 trading days of the new year.
Got it.
That's officially what the Santa Claus rally is. Now, the first day just happens to fall on the 24th, but this year it's a half a day.
Mm. Okay.
So, will we see a sell off Monday and then Tuesday begins the rally?
Hmm.
Don't know.
Okay.
Well, we'll have to see, but that wouldn't surprise me if that happened. And it wouldn't surprise me if we actually rallied into the end of the year, went back up to the highs up here.
Mm.
Let's look at this one right there.
Yeah.
So you can see that the 1 day rally right there. You can see it actually started. Not only did it close lower on Thursday, it actually opened way lower on Friday, way down there. But then just rallied, all into the afternoon. Actually went way up to the top, just hit the 21-day moving average, interestingly, and pull right back to exactly the 50-day moving average. It's funny how that works.
It's like charts or magic or something.
Yeah, they're not magic. It's just that
I know.
everybody else is looking at the same thing.
Right. Highest
That's
point.
the only reason it works is because everybody is also looking at exactly the same thing.
I like it. Okay.
So, again, what I wouldn't be surprised to see Friday is another sell off, probably in the same range, right around that same area.
Mm.
And then by the end of the day, maybe starting to come back, and then Tuesday starting to take off, and then by the end of the year, we're back up near the highs again.
All right. Well, do me a favor. I want to look at two more things with you. First,
Sure.
we'll look at the 10-year note
Oh
because I
yeah,
think the 10-year
definitely.
note had some violence. And then just so you know, the next one will be Bitcoin. It's had some interesting moves the last
Right.
7 days or
Yeah,
so.
the 10-year note. I'm actually going to go back a ways on that on the 10-year note also.
Okay.
So first thing you'll notice is that when the 10-year note goes up, the 20-year bonds go down,
Correct. Yep.
right? So they move in almost exactly opposite directions of each other. So if we look at it this way, that's what it looks like. So there's that big move higher right here, starting
Mm-hmm.
in roughly December 9th. So about 2 weeks ago, just screamed higher, went through this resistance level.
Yep.
Last time we talked a week ago, it was down here.
Right.
And I said, well, yeah, it seems like it's been going up, but it hasn't really broken out. Well, now it has broken out.
Okay.
But it still has this level to get through over here.
Call it what? Four,
Four, four,
seven?
seven,
Okay.
roughly.
Roughly. Yeah.
But let's go back. Let's look at it back to, let's change this. Let's go back 5 years first.
Okay.
So there's 5 years. So the high right here 5 years ago was in 2023. Actually, the high within 5 years, I should say. Basically five.
Okay. Let's call it
For
five.
the high was 4997 right there.
Okay. Let's
October 23rd,
call it
23.
5%. Okay.
5%. So that 5% that you mentioned before, somebody said it's going to 5%. Well, that's not really a big stretch.
Okay. So
I would say,
5% is not a crazy call.
yeah, that is absolutely not a crazy call. I mean, I would say, of course, it's going to 5%. That's where resistance is.
I like it.
That's
Okay.
that's where the orders are. So definitely we'll be going to 5%. But then the big question is, does it break through 5%?
Right.
So that's going to be the test when it gets to 5%. Will it break through? And we still got this one here to get through as well. So the high on that one is 47
Yeah. So intermediate
473.
resistance 4.7 and big resistance 5.
Right, exactly. So now let's go
Okay.
back even further. Let's go back 10 years, do this on a weekly chart. So the five is still the high
Yeah. So
going
yeah.
back
So
10
5
years.
is significant resistance.
Yeah, significant, definitely significant, and it will be meaningful if it breaks through that with authority.
All right. So we are watching the 5% level.
So let's go back 20 years.
Oh no.
Oh, now we've got a higher one over here.
Yeah. So what is that like?
So right here is
5,
2007.
five,
The high
3.
was 5.3.
All right. So
5.3 in
let me say so
2007, just
yeah.
before the 2008 crash.
So a 6, so there was another call. I wish I remembered who it was, but I threw my notes away. Someone was calling for a 6% 10-year. That might be seems
That
crazy talk.
that yeah, absolutely. I mean, this is a monthly chart now. Let's go back 25 years. Oh, well, now we're getting up there. So now over here we've got a
Oh yeah.
high of
Yeah, we're over 6.
6.8, 6.8
Yeah.
now. This is in 2000, just before the 2000 crash.
All right. So
So interestingly,
that's
so six is still within the realm of possibility, absolutely.
mm,
And this right here, the high was 5.2. This is in 2006. So 2006, it hit a high, it pulled back, went back up again, and hit about the same place.
okay.
And then all hell broke loose, and the market crashed in
Then we
2008.
got addicted to ZERP.
Yeah, exactly. All right, and then we started to recover. 2009 for the stock market right here was the bottom, but the yield continued to go down, kept going down. Got over here in 2016, it was down to 14 1.45,
1.45, yeah.
right?
Okay.
And then we got way down here. The lowest was, what was
Oh,
the
sub
low?
one.
The low, huh? It says, oh, it's
Point.
0.39.
Yeah, point.
0.39.
Yeah,
That's what it was.
0.39.
Right.
Yes,
0.39.
that's
So
nuts.
less than a half a percent
Yeah.
all the way down here.
Let's hope we
So
don't
now
go back there.
right. So that was 2020. That was COVID, of course. And
Mhm,
then 22 we had a cyclical bear market, but the 10-year kept going up because the Fed was raising rates
mhm.
during that period between 22 and 23. Actually, they actually continued to raise into 23. But so you would expect the 10-year to go higher in that
Sure.
case. And then in September of this year, they started cutting. And let's see, where's September? Right here. And the
And
rate
rates
started
still
going
went up.
higher. Rate
Now,
went up. Remember, this is a monthly chart. So each one of
yeah,
these represents one full month.
right. Okay.
So let's see if I can go back 30 years. I mean, it's still higher way back here. So we're at
Yeah.
1995 now, and we've got a high of
Seven and a
seven,
half
eight,
or
almost
eight,
eight.
basically eight. Yeah.
Yeah, basically eight back here, 1995. And remember, the 90s was a great time in the market. It
Hmm.
was good time in the economy. Everything was clicking, everything was going great. So we had 8% back here, and the market kept going higher.
Yeah.
So
Okay.
just because you have a high rate doesn't necessarily mean that everything crashes.
So what I'm taking from this again as a guy that's in the real estate industry is I'm watching the 4-7 mark first and then
Yeah,
watching five. Those are the two
yeah,
things I'm watching in the or short to medium term.
right.
Okay.
And if it gets above five, this is 5.2. These two highs over here,
Okay.
it's basically
But now
5.2.
we're going back nearly 20 years. So
Yeah, now we're back to 2007. Right.
okay.
So this one here is the recent high
Got it.
right
So
here,
I know what I'm looking
2023.
for. 4-7, 5%. Thank you for that. Let's jump over to Bitcoin because it's had some interesting moves as you might suspect.
Yes, Bitcoin. I'm a little reluctant to talk about Bitcoin because somebody on your channel last week said they're not going to go look at my channel because I said Bitcoin could go to zero.
Yeah. I'm telling
I
you,
don't
man,
know.
you got to be really sensitive
I
on
don't,
this stuff.
I can't 100% for sure say that's the reason because he never said what the reason was.
Oh, yeah, that was the reason.
But
That was
but I also in that same video, by the way, said it was going to 240. So
you did 240,000. That's
so
right.
why wouldn't he go to my channel because I said that?
We'll talk about offline. You got to remember there's some religious battles out here. So I'll
So
tell
so
you
here's what I
offline.
learned. Here's what I learned from that. It used to be when you gather with family at Thanksgiving dinner, you don't talk about religion or politics, right? So now you also don't talk about Bitcoin.
Oh, that's funny. I knew where you were going. All right. So what's it doing?
All right, so pull back, but I mean, not
Can we I think we're
it's
looking at
still
oh, it's still like I said, this is a year view,
yeah, this is
roughly.
1 year.
Okay.
Um, it pulled back, but I mean, it hasn't broken. The chart's not broken.
Yeah.
It
Yeah.
came down to the came
One
down
of
to
the
the
things that
50
I
and
saw.
basically just touched it and went back up.
Yeah. So is it basing or what would you call that?
Yeah, that's what I call it. It's
Okay.
basing. I mean, this is the kind of thing that should be expected just from a technical standpoint. When it runs from 62, 52,000 to 100 in the span of
In a
what?
straight line. Yeah.
Yeah, pretty much 1, 2, 3, 4 months.
Yeah. You got to have some get
It
back.
doubles in 4 months, then you have to expect it to base. This is typically what any asset does. I mean,
Sure.
look how long this base lasted.
That's true.
This
Yeah.
is from March until September. So the beginning of this right here looks kind of like the beginning of this over here.
Okay.
This is normal. There's nothing concerning about this at this point.
Yeah.
Now, I know Bitcoin people just like it to go to the moon,
Mm.
and it likely will eventually at some point in the
Yeah.
future.
Yeah.
But
240,000 is not chump change.
right, but it won't be a straight line.
Oh, never is.
And did I show my Bitcoin chart last week? Let me see.
I
My
don't know if
Bitcoin
Joe again.
halving chart.
Yeah, I think
Be
he did.
worth be
But
worth
yeah,
looking
show it
at
again.
this again. So this is all the way back to the beginning of Bitcoin, 2009.
Mm-hmm.
So, I mean, one thing that jumps out is that, it went from $265 to 102, 108 actually was the high.
Mm.
So this actually needs to be updated now, but it's pulling back. I haven't updated this chart in a week, but this is from a week ago. Hasn't really pulled back. It's not showing the pullback up here. But
Right.
the other things to notice is that every time there's a halving, it usually pulls back right there, pulls back right there. Actually had a longer basing pattern right there,
Mm-hmm.
and then takes off. So you can see where it takes off. It
Yep.
takes off substantially,
Sure.
2,600% in this case, but then it dropped 80%.
Mm.
Oops. Let me go back to that. Then it dropped 80%.
Yep.
And then it had a 650% run, and then it dropped 74%. So, and these two drops right here of 80 and 74, they are symmetrical. Notice not only are they roughly the same length, but they are roughly the same angle.
Yeah, roughly the same duration. Yeah. Yeah.
Right. So that is symmetrical. And this is what assets do, not just Bitcoin, but just in general, anything that you can plot. This is often what they do. And this implies that it's going to have a similar downward move at some point in the future.
Mm.
I don't know when that is. Maybe it's when it's at 240,000. It
Right.
might have a move like that,
Okay.
bringing it back to, higher than it is now.
Sure.
But there will likely be another move like this at some point in the future.
Yeah. No, that makes sense. So what are we doing as we set up the end of the year? So we've got possibility of a dead cat bounce. We had the bloodbath last week. I'm calling higher for longer, maybe no rate cuts. We obviously have the other things we know for certain is we have a new administration on the 20th. There is talk of tariffs, of tax cuts, of immigration policy changes, lots of potential inflation.
Energy will be the first one.
Yeah, energy very deflationary.
Mm-hmm.
The others potentially inflationary. What's the setup for the end of the year? What are you looking at as we wrap this up?
So what happens next week, I think, is going to determine the end of the year. In fact, the first
Okay.
couple of days probably next week. Like I said, we might have a down day Monday, but then the end of year rally should start on Tuesday
Okay.
and go into the middle of January. And usually that rally lasts until the mid part of January. And the reason is that 401k and mutual funds put money to work, all the money
Right.
that comes in from people's paychecks. They
Yeah.
have to put that to work, and they are not allowed to sit on cash.
Hmm.
They have to buy stocks. They have to be in the market.
Okay.
Now, what that means for what being in the market means is they either have to be in aggressive sectors or defensive sectors,
Hmm.
or some combination. But if they think the market is going to be going down next year, they have to still own stocks, but they will just own them in defensive sectors instead,
Okay.
which
Okay.
won't go down as much. It'll still go down, but it won't go down as much. If they think next year is going to be positive, then they'll put it into aggressive sectors.
Hmm.
But they have to put that money to work. So that money comes in the beginning of January, first couple of days, first week of January. They'll be putting it to work. That's usually why the first half of January is usually up. That's
Got
the
it.
reason. All right, so that'll be the thing to watch. And then we'll be watching the Santa rally, or actually I'll look at last year, the January barometer. So these three things that I'll start tracking starting on Tuesday, and on my YouTube channel, I will track them every day. We'll look at them every day to see what they look like. The Santa rally is the last 5 days and the first two trading days of the new year. Last year was down 1%. The second one is the first 5 trading days of January. So that means Thursday and Friday, and then Monday, Tuesday, and Wednesday of the following week. All right. Last year it was down. Basically, it was flat, let's call it.
Right.
And then the third one is the whole month of January. Last year was up 1.6%. So the trend last year, if we have all three of these down, then typically the market will be down for the year. If we have all three of them up, there is a 70, I think it's a 90% chance that the market will be higher by the end of the year when all three of these are up. When they vary like this, you look at the progression. So it went from -1 to flat to positive 1.6.
Got it.
So that's what we want to start to watch as we go into January. Not only what the numbers are, but what's the progression. All right. So we'll start to watch that next year. So I think that's what I think will happen. I think small caps usually perform well going into next year. Now that could change if the 10-year keeps going up like this, especially if it breaks 5.
Yeah, five's a big number, right? I mean, 5.
So that's the wild card in this whole thing is the 10-year. That's the thing that we really should be watching more than anything.
I agree. That's the thing I'm watching.
Yeah, both from a real estate and a stock perspective. We should definitely be watching that. So we'll see. I'll report on it every day on my YouTube channel. The other thing that I am going to be playing with over the Christmas week, and I'll show you the results next week.
Awesome.
There's 2 things. I'm going to create a dividend scan.
Yeah, that's right.
We talked about last
time. The aristocrats or something?
Yeah, the dividend aristocrats. And I'll put together a list of stocks that look like they have potential for next year. And these are long-term trades. Right. These are things that you buy.
These are investments, not trades.
That's right. Investments, you want to try to hold them for a year and get past the long-term capital gains. So that's really the purpose of it, what it's meant for. I'll have 2 different lists, 2 different ways of looking at them, but I'm going to work on that this week. The other thing that I actually saw from Stock Traders Almanac, which was interesting, and John Carter mentioned this as well during his session at the Money Show. There are certain stocks that he's noticed every year, and he says it's kind of a secret. Nobody really talks about this, but there are certain stocks that have sold off the whole year. They're at, in the case of Stock Traders Almanac, they say we look for 52-week lows in the last week of the year. And they've got some other criteria. I'm going to use some of this criteria and actually create a scan for this. Now, they have a list of stocks down here, but I'm not going to show them to you because you need a subscription.
That's fair.
You need a subscription to their website to see the list. But I'm going to put together a scan similar to this. Might tweak it a little bit and see what I come up with, because I want to see what happens with those stocks also.
Yeah, because now, if I understand the logic right, these stocks have been dogs all year. You probably get some end of year tax loss sales, kind of putting the final nail in the coffin.
Right.
And then they come back strong next year.
Well, not next year. So yes, the first part of that is right. People sell them at the end of the year to take the tax losses.
Okay.
But that doesn't necessarily mean they don't still believe in the stock. And then they may start buying it back in the beginning of the next year.
Okay.
January, after they've taken the losses on their taxes, then they get back into it because they think, now it's so far down, it's going to come back.
Okay.
So it's not for the whole year. This is meant, in fact, this guy, Stock Traders Almanac, actually says it somewhere in here. He actually says this is not something that you're going to hold on to.
Okay.
This is something that you're going to hold just for right here.
Middle of January.
You out of all these stocks between the middle of January and the middle of February.
Yeah. So this is just a trade.
This is just a trade, 2 weeks to 4 weeks, something like that. You just want to capture that bounce.
Right.
And the bounce may go right back to selling again. But these are the stocks to watch to see if that might happen.
Do you think we're going to have this creation for you for our next Sunday show?
Yes.
Oh, look at you working hard.
I'll have the list. I'll have both the dividends and I'll have the list of these stocks next week. I'm going to work on that this week during the Christmas week. Now, one of the stocks that was mentioned when we talked to John Carter was TRMD.
Never heard of it.
Right. And you can see up here, this is 1 year right
That's
here.
a rough year.
Yeah, that's a rough year. That is definitely a rough year. If we look at, this is Stock Chart's new platform, by the way, ACP Advanced Charting Platform.
Hmm.
I'm starting to play around with it, and I might start using this more often. But
Okay.
one thing is cool. So I've got this set up with a daily chart in the upper left. This is the Keltner channel. It shows you when it's at extreme. You see what is at positive extreme in September, and then it went all the way down.
Mm-hmm.
This is a 30-minute chart. This is a 1 month chart, the lower left,
Wow.
and this is a weekly chart. I mean, this is a 7-year monthly chart on the left, and this is an 18-month weekly chart. So I've got all different time frames on here, so I can see everything at once.
Very interesting.
But if we look at this one, there's what it looked like for the whole year. I'm gonna actually go back to my old one because it gives you a better view. TRMD. So that's what I'm talking about.
Whoops.
That's what we want to see. We want to find
Roll down
something
a
like
bed.
that, right? These people are just in pain for the last 3 months. They're finally going to give up down here. They're going to say, "I'm taking
tax loss harvesting, blah blah blah."
my tax losses and I'm out." So this is a good one and then if it bounces in beginning of January for a week or two, then just get out. So you could make 10-15% in a couple of
Again,
weeks.
not financial advice. This is just one guy's theory
That's
that
right.
we're playing with.
Just theory. Another one that was mentioned is CELH, Celsius Holdings, which used to be a darling. And you can see what it's done this year.
Not so much. Yeah.
Intel, of course, has been terrible all year.
Oh, geez, look at that drop. My
right?
God.
So it's down here. So these are the kind of charts that I'm talking about.
Is Intel really a $20 stock?
It's less than 20, 1950.
Wow.
Yeah, I mean, you would think Intel is not going out of business. Now they could get sold to somebody.
Yeah, I actually, again, I don't know anything, but I suspect Intel will start breaking it up into pieces.
Yeah, that could be
to extract equity value. Yeah,
enterprise
value.
It's right now it's bouncing down here 3 times. It's hit this level down here.
Yeah.
So this one here, could be an ideal one to buy right at the end of the year, and then first couple of weeks of January. This is one that you might get.
Not financial advice. Just two guys looking at charts.
Right. I mean, if you think 20% of $20 is $4, right? Yeah. That's not unreasonable to get to 24.
No, it's right there in the chart.
There, right. Yeah. So this is the kind of thing I'm going to do a scan and I'll show you what I discovered next week.
Nice.
We'll look at that.
Okay. All right. Well, do us a favor. Show your website and YouTube channel one more time. Because again, we talk every Sunday, but you put out videos Monday through Friday. People got to go to your YouTube channel to get the latest and greatest.
Yeah, anytime the market's open. So the first thing I do is just review the market, what happened that day. You can see right now we have an orange light overall in the market. You can see the market bias chart.
Yeah, market bias is really turned. Oof.
Really gone down. I update this before I do my YouTube video. Mm-hmm. So I update this right at the very close of the market. And even with the bounce on Friday, it actually went down a little bit more. And if you're not a subscriber, the homepage is open for everybody, so anybody can get this. But if you are a subscriber, you can get more details over here. You can see all the components that make up the market bias. But what's interesting, one thing that was interesting to me is that right here where the orange is the short-term trend and the gray is the medium-term trend.
Right.
So when the short-term crossed the medium-term right there, the market was right there. That was before the bloodbath.
Right. Kind of telling
already giving you advance warning that something was coming.
Very interesting. Cool.
So,
alrighty, folks, do yourself a favor. Get the newsletter. It is free. And of course, show him some love. He comes here every Sunday. He does not have to do this. Go to his YouTube channel and subscribe. Dan, I appreciate you.
Yeah, actually, if you do nothing more than just go to the channel and subscribe. That's all.
There you go. That's all he wants for Christmas.
All you need to do. I'm almost at 600 subscribers right now.
Folks, I'm going to suspect thousands of people watch this video. Can we just do them a solid and get them to 1,000 subs? just get this over with. Let's get them to
Yeah, that's the goal.
1,000.
Let's try to get to 1,000. If I can get to 50,000 like you did, maybe I'll have a party in Vegas or something.
There you go. There you go. All right, buddy. Take care. Happy holidays. Merry
All right.
Christmas.
Merry Christmas.
Thank you, buddy.